Good day, class. Welcome to Module 3, where we will be discussing corporate governance issues related to the current and local global business environment, in particular, ethical issues facing finance and accounting. The world has evolved, but as technology and business practice has changed, the guiding principles of how a business is conducted remains the same, which is to practice business ethically. What are some of the current issues in business that challenges ethical standards? The following are issues that face business leaders today as they aim to maintain the moral standards of corporate business. Environmental sustainability issues. Preserving the natural environment and proper waste disposal have become major concerns in our society. Businesses today have shifted their focus to reducing the growth of waste and to recycling. Companies have begun the pursuit of ethical sources of fuel and energy, such as batteries and solar power. Stakeholder responsibility. Stakeholders are individuals or groups that are affected by the firm's actions, such as owners, customers, suppliers, employees, creditors, and the public. Stakeholders expect a business to be responsible and responsive to their interests. Such responsibility may include donating money to typhoon victims, sponsoring an event or exhibit, or providing scholarships for needy students. Thus, a business social responsibility means accepting a duty to contribute to the well-being of its stakeholders. This is a shift away from the traditional focus on maximizing shareholder profit. E-commerce issues. Technological innovation has changed the business environment, but it does not change the basis on which the ethical business decisions are made. But it does cause companies to expand the application of our ethical standards to present situations. For example, ethical principles are now being applied to online business and e-commerce. The privacy issues raised by wholesale collection and sharing of customer data by tech companies have raised serious concerns. Ethical challenges can also be seen on how companies can take advantage of their dominant online presence to sway public opinion and consumer behavior. Focus on profit. When companies pursue maximizing shareholder value, this means doing whatever is necessary to boost the share price. This mantra, however, has resulted in the bamboozling of customers, squeezing workers and suppliers, avoiding taxes, and lavishing salaries and stock options for CEOs. People find this distasteful and views companies as ruthless and greedy. A modern and ethical view of corporate purpose is all about delivering value to customers, investing in employees, dealing fairly and honestly, supporting communities, and protecting the environment. Today's ethical standards reject the idea of maximizing profit at the expense of all others. Instead, it acknowledges the need for balance and compromise in serving all of the company's stakeholders. One of the tasks of the professional is to seek the social good. It follows from this one that one cannot be a professional unless one has some sense of what the social good is. Accordingly, one's very status as a professional requires that one possess this moral truth. The profession of accounting is a harbor for the protection of truth and integrity. The accounting profession is guided by ethical standards set by organized practitioners and government regulation. The most prominent of these are the Philippine Regulatory Commission Code of Ethics for Accountants, Series of 2018, the International Federation for Accountants International Ethics Standard, and the Institute of Management Accountants Statement of Ethical Practice. Professional accountants face the following ethical dilemmas. Fraud. In accounting, fraud is the illegal alteration of a company's financial statements in order to manipulate a company's apparent health or to hide profits or losses. Overstating revenue, failing to record expenses, and misstating assets and liabilities are ways to commit accounting fraud. Any move to inaccurately represent accounting data is a violation of ethical standards. Confidentiality. The principle of confidentiality is to ensure that information received by the accountant must be kept in secrecy and respected in the course of duty, unless obligated by the law. An accountant should never disclose or use such information unless obligated by the law. Career pressure. Pressure from colleagues and superiors may force accountants to deviate from their oath. In other words, to cook the books. Sometimes professional accountants may not even be forced to misconduct, but be tempted to violate their code in exchange for material gain. Conflict of interest. Conflicts arise when CPAs perform services to two or more parties with conflicting interests, or when the CPA of the firm's interests are at odds with those of the clients. Conflict of interest becomes unfair to both clients. CPA fees. Will you be willing to work for free or reject an offer to be paid less? It is important to remember that pro bono work is still subject to the same professional standards as other work. Legal troubles can quickly arise from disregarding professional rules. Pro bono or low-paying work is not an excuse for performing unduly. Make sure you maintain the same level of professionalism and quality of work as if the project is for a good-paying client. The overall purpose of ethics is to ensure good governance, with prime concern for ethical principles, practice, and behavior. Governance is described as the way an organization takes itself and the processes and structure that are used to realize its goals. Governance is also crucially concerned with how organizations relate to each other, how they relate to citizens, and the way in which citizens are given a voice. The essential duty of governance is to effectively and equitably implement what is called the social contract. The social contract theory says that people live together in society in accordance with an agreement that establishes moral and political rules of behavior. Some people believe that if we live according to a social contract, we can live morally by our own choice and not because a divine being requires it. Over the centuries, philosophers as far back as Socrates have tried to describe the ideal social contract and to explain how existing social contracts have evolved. The aim of a social contract is to show that members of society have reasons to endorse and comply with the fundamental social rules, laws, institutions, or principles of society. Social contracts can be explicit, such as laws, or implicit, such as raising one's hand in class to speak. The U.S. Constitution is often cited as an explicit example of part of America's social contract. It sets out what the government can and cannot do. People who choose to live in America agreed to be governed by the moral and political obligations outlined in the Constitution's social contract. Social contracts provide a valuable framework for harmony in society. An ethical decision-making test based on utilitarianism is offered by Warren Buffett. Referring to himself and Bill Gates, Warren Buffett said, "We have all the money we need. While we'd like to have more, we can afford to lose money, but we can't afford to lose reputation. Not a shred." And Warren's advice to managers facing ethical problems, he said, "I ask the managers to judge every action they take, not just by legal standards, though obviously that's the first test, but also by what I call the newspaper test. If a manager expresses uncertainty, he asks them how they would feel about any given action if they know it was to be written up the next day in their local newspaper. If the decision passes the test, it's okay. If not, it's out. The benefits of ethical practices is too attractive for companies to deny. Ethical practice and corporate social responsibility provides the following: competitive advantage, it improves employee happiness, it is better for society, and it will attract more investors. What makes up a compliance and ethics program? There is no mystery to this. It is a commitment by management to do the right thing, to act legally and ethically. But it is more than words. It is the use of sound, strong management steps to make this happen. These are the steps towards good governance. Set standards for people to follow, and practices and controls to act as checks on misconduct. Put someone in charge for this effort, a compliance and ethics officer, for example, and have senior management actively support this ethical commitment. Be careful who you hire and promote. Be sure of competence and moral background. Train your people and communicate what is required from them. Give people an easy way to raise concerns. Check what is going on. Audit, monitor, and check to see if the programs are in place. Hold people accountable. Do this through discipline and incentives. Punish mistakes and reward achievement. Investigate immediately when things go wrong and implement measures to prevent recurrence. And evaluate what your risks are and address them. Why do companies get involved in unethical practices? The pressure to succeed, greed, and monetary pursuit are common reasons, and many companies falsely realize that they can prolong their wrongdoings. But really, how great is the risk that the company will suffer ethical meltdowns? Based on the number of once well-regarded companies that has fallen, it seems that for any large company involved in unethical practices, it is just a matter of time before a serious legal infringement surfaces. And in today's global economy, a misstep anywhere on the planet can be broadcasted worldwide instantly. Unethical practice is unsustainable and too risky. Here are 3 cases of unethical corporate governance: the corporate scandal of Wework, Volkswagen, and the Wirecard scandal. Wework is an American commercial real estate company that provides flexible shared workspaces for technology startups. WeWork designs and builds physical and virtual shared spaces. At its peak, it was valued at a stratospheric $47 billion valuation. It filed for registration for an initial public offering, disclosing several conflicts of interest and mismanagement by its magnetic and eccentric co-founder CEO, Adam Neumann. The case of Volkswagen has been dubbed the diesel dupe. In September 2015, the Environmental Protection Agency of the United States found that many Volkswagen cars being sold in America had a defeat device or software. It's a machine in diesel engines that could detect when they were being tested. It changed the performance accordingly to improve results. The German car giant has since admitted cheating emission tests in the US. A federal judge formally approved a $14.7 billion settlement of the automaker's emission cheating scandal. The deal is the largest auto scandal settlement in US history. Wirecard is an insolvent German payment processor and financial service provider, whose former CEO and other executives have been arrested or otherwise implicated in criminal proceedings. In June 2020, the company announced that 1.9 billion euros in cash was missing. The search for the missing billions even led investigators to the Philippines. The links for all three cases is posted below in the description. That ends today's lesson. For any questions, do not hesitate to message me. Thank you for listening, stay safe, and have a nice day.